All right, guys, what is going on? What is Gucci gang? It is Wednesday, Wall Street Wednesday, February 19th, 2025. What's good, everyone? Chat is still members only. Know what I mean? Extra benefit to being a member here. All right. What's good, Naruto, Robert, 2020, Remy. I'm not gonna say that name. What's good, Mason, Eminem, Robin, Martin, Alex C, Jim Bob, Blacko, Willow, Jordan D, Bruce, Capitalist, Eberneth. Can I pump ES for you? I mean, I already did that yesterday. I already did that for you yesterday. I have not removed that blue drawing, dude. That shit was nasty. Too nasty. Y'all remember that? What's good, Nikki? What's good, Shampoo? What's good, Leon? Y'all remember that from yesterday, dude? Did y'all watch that? I didn't watch it, but I came to the charts after and I was like, oh shit. I was like, good golly, Miss Molly. You know what I mean? Was good, Fortune? Yeah, it was dirty. You want to know the craziest part too? You want to know the most fucking insane part too? Was that gap I told you about. See that gap right there? That wasn't half bad, was it? That wasn't half bad, was it, chat? Well, anyway, that's the fun part about educating, having fun and calling moves before they happen and all that shit. All right, so as far as today goes, man, I had some high hopes for the Dow, man. I did. I had some high hopes for the Dow Jones, and it sort of let me down, dog. Sort of let me down. Early in the Discord, I think it was at 10:30, maybe 10:40. I said I hope that I was wondering if the Dow will catch up to the other indices to trade higher. I was actually looking for 44,600. These highs up here, I was looking for that. It was looking good. And then it didn't. So. But like I said, chat, I tell you guys this all the time. I'm not always right. The markets do provide opportunities, but sometimes it just doesn't go to your target. Sometimes you just don't get TP. And it's honestly, it's not that surprising today because we have FOMC meeting minutes. So it's not, ooh, Friday. Holy shit, we got a lot. It's not uncommon to get interesting price action on days like today, where again we have meeting minutes in about 50 minutes from now. So leading up to that, you know, it is what it is, man. It's not entirely a surprise that this was not, you know, able to hit the target, but there was still opportunities for partials. We have some highs up here. We have an imbalance up here as well. How far can price go above a high? An imbalance. So that idea that I keep telling you about still holds some merit there. Boom. We just couldn't get past it. That's all. And then I was watching on a 5-minute today. I wasn't on the 1-minute chart. I was on the 1 minute for the entry, which was here. well, roughly right there. I mean, it stabbed into it and then off of it, and I marketed in, so I was in a little bit above that. Then we came all the way up here. Mitigation obviously panned out very well. See that? High, low, higher, high. We trade through it. These down candles here, back into it right there, and a small imbalance as well. So in hindsight, that was a good short. Again, in hindsight, but I was long, didn't plan on shorting. I'm not short. We just made a new low of day as well. So, you know, who knows? I do not know what to expect here for the rest of today. Don't know. Made a bunch of lower lows this morning. I actually slept in today. That's not uncommon either. But again, if we're continuing on this idea that I presented, I mean, it's already out there. I put it in a free beginner series, but that was good, Big James. That recording I did with Troy, right? And I talked about multiple times to look for, let's say, highs that are close together, which for ES would have been up here. And we talked about easy, common reversal formations, the 1, 2, 3 highs and the 1, 2, 3 lows. So we get a low here, another couple lows here, and then another set of lows here. Then, right, we trade higher towards these highs up here. So that next retracement was it. That to me is what offered an entry to go long. Now, again, as I said, does it hit up here? Did it meet that, in my opinion, pool of liquidity? Did it meet that? No, it didn't. No, it didn't. But again, today we have FOMC meeting minutes. That could be problematic for sustained moves. And then as well, you have to understand from 34, maybe 36 up to the 50s, you know, that is a chance to take partials. Okay, capturing moves, taking either partials or profits at new highs, right? So what I'm saying is, when you look at a price run, okay, if price is going to meet a higher time frame objective, or an objective that's, you know, I guess something like previous day's high, or maybe an original consolidation of a market maker buy model or a sell model, you have to realize price has to trade through a lot of things. It has to trade through imbalances. It has to trade through probably recent highs and stuff like that. So what I'm saying is, when you study price legs, right? What set the low? What was the long opportunity in your opinion? And then what were all the opportunities to take partials? So let me give you an idea here. Let's say that's a really shit imbalance, but I won't argue it. Let's just say, for example, you wanted to long this imbalance, stop at the formation low. Okay. Yeah, you would have taken some drawdown, whatever. I won't get into it. But what I want to get into is this. We just came down for some internal lows, and then Dow just made a new low of day. But anyway, because I want to see if this is still the target, and then this just looks like a run on stops to go higher. But coming back to the exercise, what I'm saying is, if you're long on this retracement here, you have an opportunity to partial here. And I'll make them green just for teaching purposes. That's a partial, right? In a little bit of drawdown, brand new high. That's a partial. This high here as well. Oh, shit. There you go. That's a second partial. And then the final TP could be up here. And so do you see why that would be beneficial to you? Let's say, for example's sake, that this doesn't go higher. I think it will. Okay. Live price, I think it's going to go higher. That just makes sense to me. But let's say it doesn't and it goes lower. And it comes, let's say, to your break even, right? You're protecting your entry and then boom, it comes down and gets you out. If you do not pay yourself, if you don't grow your account, then you went nowhere. Does that make sense? So you waited, you had the patience, you got a decent entry or maybe even a good entry or maybe even a phenomenal entry. And the market offered you a chance to profit. It offered you a chance to partial at a new high, and you didn't because you wanted to hold the entire position. And I've done this before. I call it swinging for the fences, where you just hold the entire position, all or nothing, like for that final TP up here. So this is why taking partials is beneficial. Okay. But again, study the opportunities. How many times are you able to do something like that? With Dow, same thing. We clearly made a new low of day. But because I got in at a decent entry, this is a new high. It's kind of a shitty high, but I would say this one and this one, and then this imbalance. That's 3 different opportunities to pay yourself. One of them's right there. Another one's right there. And then again, that imbalance is right there. So you had at least 1, 2, 3 different opportunities to pay yourself, or at least if it does that, I can go break even or put my stop into profit. That way, in the event it does some shit like this, it can come down and I won't take a loss and I won't take a break even, but I'll be able to get stopped out somewhere in profit. Make sense? So hopefully that gives you some, I guess, something to study and some clarity on how to actually grow a trading account. Okay. Have you seen me capture a day's range before? Of course you have. Is every trade like that? Oh yeah, getting in at the low of the day, getting out at the high of the day. Is that every single trade? No. No. But that's not the point. Do those grow your account? Oh, you bet your ass they do. But day to day, normal, just day trading or even swing trading, it's almost always the most beneficial thing to do. Just simply grow the account. New Market Wizards, yeah, that's the yellow one, but from Jack Swagger. I have that one too. I enjoyed the New Market Wizards books. There's like 3 or 4 of them. They're pretty good. But what you really don't see, and I wasn't really going to comment on this, but who he should interview is people who probably trade smart money concepts, you know, to be able to give their opinion on like the shit like I just said, taking partials on new highs, low risk, high reward setups, you know, looking for opposing levels of liquidity for order pairing, stuff like that. That would be beneficial, in my opinion. Felix, I'm not saying you can't. I call it swinging for the fences because these are base hits. When you're in and then you get out at a new high or even like this higher high here, that's a base hit. You know, you're getting on first or second base. That's pretty good. That's pretty good. Or maybe a higher imbalance. You know, that's like you're getting on third base. It's not a home run, but it's first, second, or third base, which is still good. Still pretty good. But if I'm like, yo, I'm confident, I like it, I'm holding the entire thing. I'm not just swinging for a home run. I'm trying to hit that bitch over the wall. You know, I want it to go over the field, over, yeah, it's American baseball. I want it to go over the stands, over the stadium, and hit somebody in the parking lot. You know what I mean? Bonk them on the head. Just get that ball out of here. Big home run. That's what I mean by swinging for the fences. That's what I mean by that. Sometimes you just step up to the plate and you're like, yo, this is the one. This is the one. But then other times you're like, nah, I just need a base hit. If you had to pick swing every trade or partial every trade, I'm not even sure what that means. If it was me, okay, here's what I would do. And I really shouldn't be telling you this, honestly, because this is some real gold shit, okay? This is what I would do if it was me. I would get with a programmer and I'd say, look, bud, we're about to make some pretty crazy shit. All right. And there's a gap right here. Hold on. There's a gap right there. I want to see if that ends up setting the low. This was manipulation. Next candle entry / low risk buy, first leg, and then this should have been second leg to go higher. That idea has been negated. So now this is the 1, 2, 3 formation, manipulation. The low risk buy should be in here, and then ideally we should run. But what I would do if it were me, all right, and I got with the programmer, like the world's greatest fucking programmer who knows what is going on. What I would do is I would introduce them to the MMXMs. I would show them exactly what the manipulation is, the low risk buy, first stage, second stage accumulation, and order pairing. And I would say, look, build us a program, right? Build us a program that only takes that only takes the low risk buy or the low risk short, and it partials, like, I would say 3 times. 1 at a new high, and then auto break even, and then another partial at a new high, and then the third partial would be the original consolidation. So that way we're paying ourselves. We're not always swinging for the fences, but those runners that end up going to the original consolidation, like, that's what really helps, you know, boost that account. But then you'll have stuff like this where it's like, oh, we did get in, we partialed, and then we broke even on the remainder. Like, that's not bad because you're still growing the account. And I would run that bitch to the ground. I would say, look, take every fucking buy model, take every sell model, partial all the time. Always hold one contract for end of day just in case. And I would just automate that bitch and let it run. And I feel like that would do damage. I feel like that would do easily, on the low end, probably 5 to 10% a month, in my opinion. I think a machine like that could easily do 5 to 10% every single month. Yeah, I agree, Bruce. I agree. That's what we are doing now, but with point of interest that you teach. Yeah. I mean, to me, this was kind of a shitty market maker model. Okay. It didn't really hit anything on a higher time frame. It took a very small pool of liquidity from yesterday's reaccumulation here, but that retracement, dude, is that's pretty fucking deadly. That's pretty deadly. So what I mean is this: consolidation / low resistant highs. Beautiful. I mean, that's chef's kiss, baby. That's what that is. Beautiful. That's a wonderful target. 830 is here. There's midnight New York. I guess we'll just keep that on there too. Okay. 830. So 1, 2, 3 formation, right? Below equities open. We're definitely way below. Let's throw that bitch on here too. We're definitely way below midnight, way below equities. And that retracement comes below equities as well. Manipulation, low risk buy. You could say this is the low risk buy as well if you wanted to. First leg, manipulation. So this should be the second leg to run up here. And old distribution looks like accumulation or reaccumulation. I'm sorry. This was accumulation. This so far is looking like reaccumulation. Yeah. I don't know what that was. All right. It takes buys after 5 minutes, shifts and price delivery. I know exactly where to place the risk and where to partial the first amount. Right, Ricky. And I'm sure that does wonders too. Right? If that's all you do is just wait for manipulation, wait for the next retracement after that, small risk, high reward, taking partials along the way. Dude, it's so easy, dude. It's so easy. The hard part is when the impatience kicks in and you want to do shit. Should I partial? Should I do this? Should I do that? Should I try and pass my funded account challenge in one trade because you know you're trying to trade NQ contracts at $20 a point? Hey, I did it until I passed my first one, but you know, it's just like just follow the fucking rules. Didn't I say that yesterday? One of y'all was saying something. I didn't partial at a 1 to 2. I was trying to hold for a 1 to 3, and I said, well, fuck. You know, if you break the rules, you suffer the consequences, right? It's the same idea. It's the same idea. I struggle with when the low is set in. Remember the order of models, my friend. You don't have to trade at the low. You just have to trust, okay, if the low has been set, then we're looking for a retracement and you expect a retracement. And you say, okay, cool, I want it to come down. I'll long on the way down. Drawdown is okay because it doesn't go to your stop loss. It looks like it might. And if it hits your stop loss, it hits your fucking stop loss, baby. It's okay. If you risk only 1 or 2%, then why the fuck are you worried about it anyway? What are you worried about? Hell, if your stop loss is like a fourth or a third of your recent trade win and you're playing with house money, why does it matter then? You know? I'm trying to give you guys some ideas here, dog. On how to trust it. On how to trust it. Maybe our 1 p.m. macro will deliver. Honestly, we should get there faster. We should get there like now. This should not wait another 20 minutes. This should bang right fucking now. This should be that Curry with the fucking 3 from like half court, you know, from the logo just splashing. In my opinion. I don't even know what a jackknife trade is. That sounds interesting to me. That sounds interesting to me. I'd like to put an alert there though, just so you know, honestly, midnight New York is really kind of annoying. I'll be fair. I mean, I'm glad that it's up there, but it's kind of like getting in the way. But what we focus on is if you have the real buy of day, your risk would be the low of day. But for fractal action, you have to start from higher time frames to get down to the smaller time frames to understand where you're going. Jesus, Ricky, I really need to figure out what you just said here. It's those people who get the bottom tick of the day and think it's a sniper entry, but really just a guess. Yes and no. If you have relative strength on your side, there's at least an edge there. But historically, and I've been vocal about this for like 3 or 4 years now, I always said like, hey, look, I used to do this, but I don't do that anymore. So what I do now is what I teach you guys to do. Wait for the low to be set. You can get in like after the closure of that candle, you know what I mean? Like 9:30, you know, you could have waited 9:25. All right, 9:30, a little bit of a down tick. Like, okay, cool, I'm long below the open or close to it after a 1, 2, 3, 4. I mean, this is a 5-minute time frame. You know what I mean? Like, who's to say that right fucking there? That right there. Okay, I didn't even know this was right here, but look at that. Right? 9:30 trades down right into that down candle. That, boom, could be your entry, partial at a new high. We don't make a new high up here because it does come back down, but it's like in new high, partial, 5 points. Okay, that's an easy $200 in 2 minutes. What's wrong with that? What's wrong with that? So, and then, yeah, look at that. See, this is the day's candle. And you would have been longing way below the open of this candle. And that's true too, Ricky. I mean, you can have defined risk. You could just say, all right, fuck it, I'll buy the low below a low, but it's like, okay, what are we gonna give it? 5 points, 10 points? It's hard to say. You would have to go and put, I guess, your stop right somewhere based on a higher time frame concept somewhere else. Or like Sunday's gap, for example. You could do that. But the stop based on that is typically a larger stop than it would be is if you would have just simply waited for the low to be set and then played the next retracement. Meaning, for example, and this is just hypothetical, like we could buy this third lower low and say, okay, we're going to have a 10-point stop. Or we could just wait for that run and then say, okay, cool, we'll play a retracement and now we'll have like a 5-point stop and then go. Does that make sense? So it's like, what's the point of getting the low of the day if you're going to have a higher risk versus getting in a little bit later, having a smaller risk and still catching the majority of that same move? It's all about, it's not about getting the big wins, chat. You guys have to realize it's not about getting the big ass wins. It's about low risk, high reward setups, small losses, big wins. And again, I worked on this for like an hour yesterday. I worked more and more on the 48 laws of trading. And trust me, all of this shit is in there. That's going to be a long video, dude. A long video. I'm trying to tell you. It's going to be a long video, but it's going to be worth it. So, 1236. Looking pretty good. Looking pretty good. There's nothing wrong with that either, Cameron. You could just auto, hey, partial to 1 to 2, partial to 1 to 3. That's fine too. Who spelled trader with a T? Ricky's doing voice chat, voice to text over here. But the difference is we had the low of the day for risk placement. I enter on a 5 minute on the left and a 1 minute on the right so that I can get proper location. Yeah, I mean, it all sounds like the same shit, just said probably a little bit differently. You know, waiting for a higher time frame candle to open, trading the opposing direction. Easy. Easy peasy, dog. Damn, that energy drink is hitting, dude. Fuck. Might have to take a break. Everyone got chopped up on the 1 minute yesterday because they're not using the 5 minute location. There is no guessing. And one of them, the other is hypothetical. Yeah, so many people said yesterday the price action was shit. Well, how was I right again? Yesterday was so shit, right? It was so bad. Oh, did I delete all the markups? Oh, fuck. Ain't that a bitch? Well, yesterday was so shit, but I called the move lower to go higher, and we did exactly that and got the gap to the T in the after hours. How? It just goes to show people don't know how to trade, bro. People don't know how to read. You don't read fucking books and you don't read candlesticks either, but you're trying to be a fucking mentor. Oh, fuck me, dude. That's fucking wild. That is wild work. It ain't that hard to read, bro. It ain't that hard to read. Can I read it 100% of the time? Absolutely not. Absolutely not. But, I mean, fuck. How do you keep saying this is low probability conditions, but I keep telling you guys where it's going to go before it's going to go? That's crazy. You should go be a weatherman or a weather woman, weather person, whatever it's called. Jesus, get paid and still be wrong, you know? Fuck. It's insane. But, you know, social media is its own thing, bro. Social media is the Wild West, man. It's the Wild fucking West. The Wild, Wild West. Let's give a quick check on Dowski. Oh, look at that gap we talked about, like right in here. Trading a little bit higher. That's not bad. New high, that would be a partial on something like that. Easy 40 points or so, just right there. Easy. On the stream, live. In front of you. Beforehand. Come on, baby. I ain't your fucking teenage mentor. I ain't your teenage mentor, dog. We got 4 ticks to go, baby. Can we get 4 ticks, please? Can we get 4 ticks, dog? It's looking more like that 1 p.m. macro. Nah, it's going to get there before the macro starts. It's going to get there before the macro starts. I'm sticking to my guns. I'm sticking to my guns, baby. I'm trying to time it. Can we get 3 more ticks? Can we get 2 more ticks? Can we get it? Pump it. Pump it. Clip it. Clip what exactly? Yeah, Mason, I should do that. I should text him, huh? But hey, bro, override the macro. Manually drag it. Wow. Jordan might be right. Or shit, we could both be wrong and they could just trade lower instead. I mean, that's a possibility as well. I mean, again, dude, it's to me it's speculation, okay? Um I can time entries really, really fucking well because you're waiting for certain criteria. But it is way more difficult to time exactly when the TP hits, though, or should hit, rather. At least for me. You know, I hardly ever tell you, oh, it should hit during the 1 p.m. macro or the final hour or whatever. I hardly ever do that. I hardly ever do that. A couple weeks ago, I told you, yeah, I was going to hold for the final 10 minutes. Or I was going to hold until the close. And then it hit TP in the final 10 minutes. And I went, told you so. Right? But that hardly happens. Entries are easy. It's timing the exit that is a little bit more, I'd say a lot more challenging. Trying to get out at the exact high. It's difficult. Yeah, Jordan. I mean, it really has been interesting, Jordan, studying the macros almost every single day, right? Looking at which one sets the low and the high, or, you know, which ones deliver to an imbalance or deliver to liquidity, for example. So, like, if we look at today, just today, 9 a.m. macro set the low. 10 a.m. macro was the retracement for the long. 11 a.m. macro, it doesn't really deliver to liquidity or anything. There wasn't really too much going on there. The 12 o'clock macro ran liquidity, right? And then, like you said, now we're approaching the 1 o'clock macro, which is likely to take us higher. Or because we have meeting minutes, that might override the macros. So, you know, we'll have to see. But again, it's just the study of, like, look at it. The low, a high, manipulation low. Like, that to me is just pretty clean, right? Like, that's cool in my opinion. It's not just about concepts. Everyone knows the concepts, right? Well, not really, but everyone thinks they know the concepts. But it's never just the concept by itself. It's never that. It's time, price, context. Not different. You know what I mean? And that's why I see a lot of people get it wrong. A lot of people try to run mentorships or send signals, and they just really, really fuck it up. And that's because they're not using the right formula. They're not using order pairing as an idea. Meaning, order pairing in the way that I view it is, we manipulated, right? Or market manipulated lower, knock everybody out. I would even say this is manipulation too. I said that as it was happening. Now, you know, since that occurred, order pairing should be up here because you have this high at 11, which is just shy of this consolidation up here. So the order pairing idea is the market should trade above 155 in order to meet and pair the orders that are resting here. Does that make sense? That's why I call it that. It's order pairing. They're going to pair the orders together. Make sense? So smart money is going to buy that below the low. They're going to be buying that shit, mark it up, and then they're going to sell it. Make sense? That's the whole basis of liquidity to liquidity. That was the whole basis behind yesterday. Yesterday, we should go lower and then we should go higher. What'd we get? We went lower and then went higher. Right. Order pairing. Order pairing. At least to the low. We went higher, in my opinion, remember to hit that imbalance. So that was more like a rebalancing, but still works, in my opinion, the same way because of that short-term high from yesterday. That macro Google Sheet's about to be legendary. Oh, hopefully you've been filling it out because I have not. I have not been. So we'll see. We'll see if this is a mitigation play here. I don't know. Again, we're really close to meeting minutes, so it might not work. But there's a gap. Could be a reaccumulation idea on a smaller time frame to fucking launch that shit. But the macro is coming up though. The 1 p.m. macro is coming up. $61.57 is yesterday's high. All right. So what'd you guys learn today? Let me open up the chat. I know there's some non-members in here. We should bully them into getting a membership. That's what we should do. Chat's open to subscribers. What have you guys learned today? Have you learned something new? Let me know in the chat. Will, the macros are 20-minute time windows. They're the first and the last 10 minutes of every hour. They are the first and the last 10 minutes of every hour. So for example, 11:50 to 12:10. That's the 12 p.m. macro. 10:50 to 11:10. That's the 11 p.m. macro, or 11 a.m. macro, excuse me. Okay? Every single hour. Every single hour. Now, I've said this before, but not every hour holds the same weight, in my opinion. But again, as I've already said, study them though. Certain macros set lows, certain macros set highs, certain macros manipulate, certain macros, might deliver, which is what we're going to wait for now. We'll see. Miguel said macro. Mason said be patient. Nice. Hats off to you. And wait of the macros. That's it? That's all you guys have learned today? No one else has learned anything else? Am I that bad of a teacher? Am I that bad, chat? There's 64 of you and only 3 of you have learned something today. Damn, that's like 5%. That's pretty bad. That's pretty bad. When you say price, what do you mean? I don't know. Price is price, dog. 151, that's the price. Just came across your live on the feed. Do you stream every day at what times? Monday, Tuesday, Wednesday, and Friday at 1 p.m. EST. Every week. Every week. Monday, Tuesday, Wednesday, and Friday at 1 p.m. EST. For free. But yeah, dude, that's crazy. We were like 2 ticks shy. We got 54.25. Yeah, we were 2 ticks shy of that. Let me just do a speed run real quick. Yeah, Dow hasn't done much here, which again isn't a surprise given meeting minutes in a few. But it's cool. Just want to get a vibe for what the other indices are doing. Ricky said, I've noticed the best move happened in the first 15 and last 15 because of the synchronizing closing of the candles. The 15-minute bar still has 5 minutes before it closes at the 10-minute mark. Mm-hmm. Well, Ricky, like if you look at yesterday, for example, if we go back to yesterday, right? 250 is here. 250 is right there. And that is almost when the move started. To me, the move started at 254. That was when we got that. That was the start of the run. But like that was the time window. But 245 isn't bad because it's that 15-minute candle. And I can agree with that at least. But the majority of the moves are going to be in that final 10. But I mean, it's really not that much of a difference. It's only an extra 5 minutes. Wait for the low to be set and play on the retracement, says Eberneth. Appreciate that. Fractal said, doing dishes while I listen to you. I longed to yes. In the 10 a.m. macro, I took profit or partials on the closest high, but I have to study more when to close and where to close. Taking partials is important. Oh, well, Ricky, I'm not really sure how Dakota trades, to be honest. I've seen him a couple times, and he does like 100 tick charts or something with NQ, and it just I don't vibe with it. I don't vibe with it personally. I gotta look at normal charts, bro, like this. I gotta see the price. I gotta see the time. I can't do price-based charts without time. I don't know. I don't think I can do that. So yeah, I don't know what else to say at the moment. We're just waiting now. Yeah, I've got some really old books from Larry Williams. I mean, all his books are old. They came out in the 70s and 80s. But they're pretty good. They're really fucking good, actually. Like the how to... Oh, God, the title's so long. It's the white one with the red letters on it. Like how to find big moves in the stock market or some shit. That's where like the divergence comes from. when stocks outperform their index, or when a stock outperforms its peers, like JP Morgan outperforming the other banks, like that is smart money accumulation, which Larry Williams called professional accumulation or professional distribution, or maybe like a commodity to the commodity index, or something like that. That's where that stuff comes from. Everyone thinks, oh, it's from ICT. No, not all of it. Not all of it, dog. Actually, I'm going to look this up real quick. How I made $1 million last year trading commodities. That's a fucking gold one. That's a gold one. The secret of selecting stocks for immediate and substantial gains. That's the one. Oh my God, it's $13 on thrift books. Are you fucking joking? I'm about to buy that bitch right now, dude. Just so none of you can fucking have it. That's just wild. 13 fucking dollars. $13, dude. $13 on thrift books. It's insane. One of y'all should pick it up. Appreciate that, Raphael. You as well. I got stopped out in profit today, so I'm like over today's price action, personally. Well, our stocks are kind of flat, I guess. I might be up. I might not be on the stocks account. I'm not sure. Wouldn't bother me either way. Ooh, Ricky. Yikes. He's made 200,000. That's the people I'm trying to type in money from. I mean, look, I don't have anything against Top Step, but it's hard to believe sometimes when I see the way they trade, and if I'm watching them and they're taking a lot of losses, like, how do you manage to make such a shit ton of money when you lose most of the time? I don't know. It's just, I don't know. I'm not saying they're frauds. I'm not saying none of that. I'm just saying I just have a hard time finding that connection when you're wrong a lot, but yet you pulled in a lot of money on your trading account. I have a hard time seeing that. I mean, I it's believable. I'm not saying that they're lying. It's probably true. It's just hard for me to see that connection. Which funding company do you recommend? I don't recommend getting into a funded account until you really know what you're doing. If you're brand new to trading, I would stay on demo for at least, at a minimum, and you're going to hate this, at a minimum, I would stay on demo for 6 to 12 months. Yeah, Mason, I agree. They're cool guys. I don't got nothing against them. Okay. It's just hard for me to see it. That's all. It's just hard for me to see it. Ugh. Appreciate that, Abel. Appreciate it. If you're still here. What's good advice, Jordan? I don't give out trading advice, you know what I'm saying? So it ain't me. It ain't me. I don't, not financial advice, you know what I'm saying? The reason most people don't is because you're in a hurry to make money. You're in a hurry to make money, and you shouldn't be. I had someone ask about that the other day. I ain't gonna tell you who it was, but they were just like, hey, John, you know, I'm into trading now. I want to buy a Corvette too. It's like, bro, that is, no, you don't do that. Like, you don't get into trading your first or second day and say, oh, I want to buy this, I want to buy that. That is absolutely the wrong mindset. It's absolutely the wrong mindset. It should be learn the skill set for at least 6 months, maybe a year. I know most of you won't wait that long. You think you're going to be the exception. You're not, but you think you will be. Learn the skill set. And then I would start with one of the smallest amounts possible. $100, $200, maybe $300-400. And then I would definitely not start off on E-mini futures. I would start with the micros, one contract. Micros, one contract. And yeah. And I agree, Mason. I agree. Appreciate that, Jordan. I mean, yeah, we're just, you know, we're moving a little bit, but we're not doing a whole lot. It wouldn't surprise me. If I was long from this morning or long from in here, I'd probably have a stop at the high end of this, which is the low end of this imbalance. I'd probably have it like right here. And I would just wait. We hit this imbalance. If we're going to trade higher, to me, it shouldn't trade to the low end of that. But it is looking a little bit janky at the moment. But yeah, beginners, trade demo, learn how the markets work. And there's also another reason too. If you're trading demo, okay, what you should be focused on is how the markets operate. Why does it go higher? When does it go higher? You know, what are the entry opportunities? Understanding manipulation, which it's really hard to understand manipulation until you get manipulated out of a position. Like, it's hard for people to understand manipulation if you didn't get stopped out at this low just to see the market rail higher, because that will piss you off all the time. Be like, oh man, I got stopped out at the low and the market went higher. This is bullshit. It's not bullshit. It's how it works. It's how it's designed. Literally, it's coded to do this shit. Sometimes it's manually manipulated in order to take certain lows or certain highs. That's the name of the game. So don't hate the game. You know what I mean? You got to learn the rules before you play. Otherwise, you're going to get creamed. It's like going up against a grandmaster in chess. If I went up against a grandmaster, I'm getting slapped. I'm getting absolutely slapped in like the first probably 12 or 13 moves. I'm done. I'm toast. My heart is already racing when I'm in a demo trade. Right. And that's what I'm saying. That's what I'm saying. It's not even real money. It's paper. Your heart's probably racing because you probably want to be right and you probably don't want to be wrong. And that's one thing you have to get over as well. In life, everybody wants to be right. Nobody wants to be wrong. Shit. You talk to all of my exes, they're the same fucking way. They're the same way. They were all the same way. No, John, you're wrong. I'm right. All right, bitch. You know what I'm saying? I'm sorry, I shouldn't have said that. But it's like everybody has this internal ego. We don't want to be wrong. We want to be right. Even when you're wrong, you want to be right. No, the market can't go any lower. It can't go any lower. Yes, the fuck it can. Yes, it can. The market can't go any higher. I got a short. It can't keep going higher. Yes, it can. Yes, it can. What's that saying? The market. Oh, hell, I don't know what it is. The market can stay irrational longer than you can stay solvent. You got to know the rules before you get into this. Reverse engineer why most people lose. That's how you win. That's how you win. Should I keep getting ads for what's it called? Radar detectors. You know, if I go out and start driving 80, 90 miles an hour everywhere, at a certain point, I'm going to get pulled over and I'm going to get a ticket. It's just the name of the game. But if I get a radar detector, and if I'm doing 80, 90 miles an hour, which I don't do, okay, I don't do that. But if I did, hypothetically, right, allegedly, then I could say, okay, the beeper's going off. There's a radar not too far. I should slow down, right? You got to learn the rules of the game before you get cooked. And most people don't want to do that. They want to come in here. They think they're going to, be the next Wolf of Wall Street or whatever. And they get slapped because they don't take the time to learn how it works. They rush into trading with live money and they get in an emotional roller coaster that prevents them from being objective. It prevents them from, it takes them into revenge trading and stuff like that, over leveraging and all that because they want to get their losses back or whatever. Do you run your own course? I saw 2 to 3 guys who recommended your theory. What theory is that? I do know the basics, but I'm not sure where to start to actually learn how to make moves. So I know I'm going over the time. I mean, I got all the time in the world. Let me see. There's a few different courses that I have. They're all free. Okay. None of them are paid. None of them. Now, are there certain videos and extra benefits that you get from being a paid member on here? Oh, of course. Of course. But the free beginners trading course, that's free. There's a smart money sniper course. That's 29 videos. That's also free or mostly free. I might have included a couple of, paid videos at the end, maybe. I think. It looks free to me. It looks free. Anyway, free beginner series is free. Smart money trading course is free. The For Students playlist is free. The personal development playlist is free. And yeah, so there's at least 3 right there. All free. Free, free, free. Appreciate that, Eduardo. What I learned most from demo trading was my risk was most important than my profit. Protected me from revenge trading. Also kept my psychology in check. Yeah, there you go. There you go. You should always consider the risk before the reward. Every time. Every time. What am I willing to lose? And then, okay, what can I gain? I think it, how do you say your name? Miraz? That sounds right. Kinda. Let me know. Let me know what you think. I mean, you know, it's free. It's not going to teach you like everything. I mean, that's what these live streams are for. That's what the market reviews are for. That's what the Discord is for. You know, when I tell you, let's say price levels in advance, like we've been waiting for these fucking highs for like an hour. You know, well, maybe not that long. I lied. Maybe like 30 minutes, 45 minutes. No, I was right. That's about an hour. We've been waiting for this shit for like an hour. I want to see if we can we get the fucking pump, dude? Can we get it? Can we get it, dude? Fuck. I've been like trying to stretch the stream out so we could finally see if we could see it happen. Because again, it's that ego. I just want to be right, dog. I want to be right. I want you guys to study price. We're watching it together. Boom, baby. Now we can end the stream, dog. Y'all be blessed. Y'all don't do anything fucking stupid. I'll see you on Friday, the 21st for the next live stream. I'll put out the market view tomorrow, every Tuesday, every Thursday. Reaccumulation, imbalance, boom, order pairing. Beforehand, dog, totally for free to anybody that's willing to hop on here. All right. See y'all Friday.